Hello and welcome to another update video about Solana. Just a quick update because we don't really have any change in wave count. It's just simply following the wave count at the moment, just consolidating a little bit over the weekend, moving sideways. The idea is still that in the overall bullish scenario, there's a bullish one and a bearish one. First of all, let's take a look at the bullish one. That was here the wave 1 and then WXY. Even in this Y wave, we could get one more low. And the expectation is that we get it as long as price doesn't show an impulse above $17.90. So that is the bullish count. And if we get one more low, ideally it doesn't sustain below the $12 level, below the 78.6 retracement. If it holds below that level, then there is an increased risk of developing something like this, which would be an ending diagonal, which is the bearish wave count in a wave 1, 2, 3, 4, and 5. Yeah, an ending diagonal. Below $12, this wave count will get much more likely because, as you probably know, any sustained break below the 78.6 retracement typically tells us that it's failed to create an impulse, which would be this one, failed to create an impulse here, and it was just a correction in the end, and it's now coming down in an ending diagonal to finish off this overall bear market, but it would most likely then break below the December low of $8. So these are the two main scenarios we're watching. It all comes down to the $12 level in my opinion in the very short term. However, I would expect one more low unless price can show us an impulse. What do I need to see? Okay, so for me to say that the low is in, I need to see this. Wave 1 could be in already. Wave 2 could be in. It would now need to show me a third wave, a fourth, and a fifth. I need to see this, and I can change that maybe to orange. So that's the breakout count I need to see. I need to see 5 waves above resistance. At the moment, I might have a wave 1, I might have a wave 2, but that's not large enough. From a degree point of view, wave degree is not large enough for me to say that, because it could simply be, as highlighted in yellow, an A, B, C structure. Okay, so the A wave could be a diagonal, the B wave corrective, and the C wave could be an impulse or a diagonal. So in the orange count, if I zoom in a little bit, yeah, the wave 1 could be, again, a diagonal, but the problem is, after a strong move down, if we do not see an impulse to the upside, and it's just a diagonal, until it forms 5 waves up of sufficient wave degree and size, I cannot really confirm that we have formed a low. Now, the potential is there. I think you need to know about it, but it's just not reliable at this stage, okay? You need to know, yeah, we could have formed the 1-2 setup there, because the move down looks corrective, but I did say that in previous videos. But without a break above resistance, and without having 5 waves of the next larger degree, followed by a subsequent 3-wave pullback, which would look like that. So one second, let me just add that to the chart as well. So followed by an ABC structure, I cannot confirm that a low has been made. So what I need to see is, this is resistance, $17.30. Going a little higher would be good. So $17.90 is where the sell-off candle started. But eventually I need to see this. 1, 2, 3, 4, 5. A, B, C forming a higher low, and then it can take off. And if we see 5 up, we have already a higher probability that the low could be in. Then ABC down, even more probability, and then this is the next setup. Now that can set us up for higher in a third wave. But until I see that, honestly, I need to be focused on the downside. Now, a break above 1790 will make me follow the bullish count a little bit more closely, yeah, highlighting the potential a little bit more. And at the moment, it is a potential. I mean, anybody who wants to trade this on the long side, I think it's quite easy and quite straightforward. I am not telling you to do it. I don't think it's a high probability trade, but it can work out. If it works out, it's phenomenal reward to risk. I did say that in the ADA video as well, because, I mean, if the low is already in, then the bear market low would be in already, right? And you could just go long with a stop below the June low. Okay, it's nothing I would take at this stage, because I don't have evidence that we have reversed trend yet, but the risk is fairly low compared to the reward. Yeah, so that the potential is there. It's just from an analysis point of view, I cannot confirm that a low is in. So at the moment, I'm following mainly the white wave count here with the yellow subwaves. So basically an A wave to the upside, a B wave down, and a C wave up. And that's because we have made lower highs and higher lows. I don't know if you've been following the ADA chart, but it's the same thing, here as well. This could be an Elliott wave triangle which is forming. Just to show you the subwave count, A wave, B wave, C wave, D wave, E wave. It would need to continue to do higher lows and lower highs. Yeah, but in this wave count, it would need to stay below $16.20. If it goes above it, it's probably the yellow count. And if it goes above $17.90, then we can look at, okay, maybe an orange count is developing, maybe a bullish breakout count is developing. So I'll keep you updated. But besides, until then, the forecast of sideways movement or eventually one more low is being followed, and currently price is adhering to it. So let's see. It's slow on the weekend anyway. Let's see what the new week brings. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.